Welcome to our daily Forex market analysis, and this is for trading on August 6th, 2019. Just a quick disclaimer here before we get started. This is for educational purposes only. Trading is a risky business, so please be careful with your money. As usual, excuse me, we'll start off by taking a look at our calendar here. So in terms of news today, we didn't have a ton of data. We had PMI numbers out of the Eurozone, and we have a mixed bag here. In terms of the PMI numbers for the US, we had negative numbers, and a New Zealand employment data came out positive. So coming up here, we have Japanese data here, and then trade balance numbers out of Australia. So if the trade balance numbers here are below expectations, that will be negative for the Australian dollar, especially with the current situation that we have right now with the trade war tensions escalating. Any negative data for Australia or New Zealand dollar could have a negative impact on those currencies. And then coming up on August 6th here, very, very important, we have Australian dollar cash rate statement as well as RBA statement. Reserve Bank of Australia has cut rates twice already, so we're not expecting an interest rate cut here. However, if they comment on the trade relations between US and China, and they're concerned about it, and they're concerned about the health of the economy, all of that will be negative for Australian dollar. So keep an eye on that. And then later on in the Asian session here, so this will be in the London session, and in the Asian session here, we have New Zealand dollar monetary policy statement here. We are expecting an interest rate cut here, so that would be, if that happens, that would be negative for New Zealand dollar. And I'm not expecting a whole lot of bullish statement out of Reserve Bank of New Zealand. However, we do have to keep an eye on it. If their comments are more positive than expected, it could have a positive impact on New Zealand dollar. However, at this point, I'm actually expecting dovish commentary, and that should be negative for New Zealand dollar. Other than that, some other developments in the market here. We have had escalations between US and China. So the trade war negotiations haven't gone that well. Last week, President Trump actually announced that as of September 1st, he was going to put more tariffs on Chinese imports into the US. And as a result of that, we have seen China change the way they're approaching this. So their strategy has now changed. Before, they were all about appeasing the US and working with them and being diplomatic. Now they're actually going in the opposite direction. So the big problem here was that China had said that they would buy more agricultural products from the US, and they have not fulfilled their side of the bargain. And as a result of that, President Trump is threatening to impose more tariffs. Now, the big debate here is, or the problem here is that those products or those areas that produce the agricultural products are the writings where President Trump has a lot of influence. So China is trying to hit President Trump's base, and President Trump does not like that. As a result of that, we are seeing escalation. So China, instead of trying to appease US this time, actually retaliated, and they are actually saying that they are going to cut back on buying agricultural products, and that is bad. So that escalates the problem. Another thing they have done is they are letting their currency drop. So there was this base support that Chinese yuan had. Now Bank of China is actually letting it for China, is letting the price drop through that. And that is manipulation of the currency. And the US is calling that currency manipulation. And that further escalates the problem. So I would highly suggest actually reading up on that. So one is this treasury is designated in China as a currency manipulator. So basically that just pushes the parties further apart in terms of reaching an agreement. So that is negative. It's negative for the US dollar, it's negative for the stock markets, and it's actually positive for safe haven assets. So we're looking at Swiss franc, Japanese yen, all of these will actually go up. It's also negative for Australian dollar, New Zealand dollar, Canadian dollar, or these are the currencies that usually do well when the stock market goes up. But when we see the trade tensions escalate, they do worse. So overall, this is a negative for Australian dollar, New Zealand dollar, Canadian dollar, positive for Japanese yen and Swiss franc. So that's what we have going on in the market right now. Also keep in mind that in August, our liquidity is really low, which means that when the orders come into the market, they tend to move the market. So keep that in mind. So that's what we have from overall market perspective. So let's go on to our charts now. Euro dollar here, we had a huge move up in euro dollar because US dollar has taken a hit. Euro dollar has gone up as a result of all these trade tensions and so forth. So we have seen a big, huge move to the upside. And now we have gotten through this important support resistance area at 1.1200. So price is on the other side of this. That means this is positive for euro dollar. So we're looking for price to continue higher here. The target here is the top of these candles here at 1.1280. So bullish bias for euro dollar, and I'm looking for price to go all the way into the high here now that we have broken through this level. So bullish bias there. Our pound dollar here, pound dollar hasn't really done much. We have seen pound dollar basically trade in this range. So it's still range bound. It hasn't gone anywhere. We have an indecision candle here. So prices moved in both directions. It went up, it went down, and we have a neutral candle here. So at this point, the bias is neutral. Now with this one, what I would look for would be the level at the high here. If price breaks through today's high, then I will look for price to do a follow through and go into the next level here. So at this point, the bias is neutral, but if it does break higher or if it breaks above today's high, I would look for 1.2250 as the next target. So bias here is bullish. Bias is neutral, but once it goes to the high, and then it's going to turn bullish for our pound dollar. And so first target here in that case would be 1.2250. Second target here would be the top of this candle here, which is 1.2370. So for now, bias is neutral as long as price stays in this range. If it breaks up, then I'm looking for those two levels. Now, should it break to the downside, if it breaks through the low here, in that case, the bias then turns bearish, and I will look for price to drop further into 1.1980. At this point, we are neutral, and we have to see which way it breaks. But if it goes into the high and does not get through, then I would be looking for price to come back into the range. If it goes into the bottom and does not go through, then I'm looking for price to come back into the range as well. So overall here, bias is neutral for pound dollar. So British pound has been impacted by Brexit news. That's why it's not going up like euro is, because it's just, it's dovish right now because of Brexit, the way Brexit is going. All right, so next one here, Aussie dollar here. Aussie dollar, we saw a drop in Aussie dollar, which is what I was saying earlier, because of China-US trade relations actually going bad. We have seen Australian dollar and New Zealand dollar drop. So based on the candle here, as well as the market, what's going on in the market, bias is bearish for Aussie dollar here. And in terms of the pullback here, so we are into these levels that we haven't been at quite some time. So if you were to zoom out, we are sort of breaking the lows here. We haven't been at these levels since 2015. So we are going into these very important levels here. However, because of what's going on in the market, bias is bearish. And I think we could, let's go to an hourly chart here for a second. So this is where I would look for a potential support resistance level. If price stays below 0.6770, I would look for price to drop. Otherwise, it could go into this R1 level. At this point, bias is bearish, and I'm looking for price to drop further. And in terms of our targets, let's see where we are. So we have to go all the way back here. So for today here, I will look at, hard to pick targets because we can't see them. All right, so we have, that one may be a little too close. Let's take a look. Yeah, that's a little too close, 0.6734. So I would say 0.6700 will be the next target here for Aussie dollar. So overall bias is bearish, and I'm looking for price to drop. So we could get a pullback into 0.6780 and then a further drop. Overall though, bias is bearish. New Zealand dollar here, we had positive news come out. The data that came out this evening for New Zealand dollar was positive. So that's why we have this big move to the upside here. However, it creates this inefficient move here, inefficient move, and that could get filled, especially keeping in mind the current market situation. So overall, though, based on just the technicals here, the bias is to the downside for New Zealand dollar. So if you go back here, so actually it was neutral. So today's candle close was neutral. We have seen price go into this level here, and I would expect price to hold here. So if price holds below this level here at 0.6585 level, then I would look for it to go down. So my bias here for the daily is neutral, but I think this one could drop here as long as it holds below the support resistance at 0.6585. I will look for price to drop. So looking for price to drop here and fill this inefficient move here to the upside. So as long as it holds below, I'm looking for this to get filled and for price to come back down into 0.6500. So that's New Zealand dollar. Dollar CAD here, this one hasn't done much. We have seen price just go sideways here. Today's candle closes neutral. We have pins on both sides, small candle body, and that shows that price is neutral here. So in this case, I will look to see how price reacts at the bottom, today's low. If price holds above, then I'm looking for price to go higher. And if it goes through it, then I will look for it to drop. So at this point, we are neutral, and it really depends on how price reacts at today's low. And that's what will decide where our strategy will be. If it drops below, I would be aiming for 1.3100. Excuse me. If it holds above, then I am looking for price to go higher towards the high here, at least the high of today here. So 3250-ish level. But overall here, today's move is neutral. Okay, next one we'll take a look at onto our commodities here. So we have silver. Silver has done well today. And it's still holding in the range though. So looking for it to go higher towards the top of the range. 16.65 is the target here. So bias is bullish. And if it stays below that level, then I would look for price to come back into the middle of the range, potentially into the bottom of the range. So for now, bias is bullish towards the high of the range. Gold here. Gold has done really well with all the market uncertainty. And this is what we see when the market has so much uncertainty. There's a lot of excuse me, a lot of problems in the market. Our safe haven assets tend to do well, like I said before. So we have Japanese yen, Swiss franc, gold is one of those. So bias here is bullish. It has broken through the high. So looking for price to go higher. And next target here is 1485. So bullish bias here for gold. Oil here. Oil does not do too well when there are problems in the market with China, because China is a big consumer of oil. So if Chinese economy does not do well, or if investors think that Chinese economy will not fare well, that will be negative for oil, because then that means they will not need as much oil. So bias here is bearish. Price is holding below this level, and I am looking for price to go down further. So we had a pullback, so I will look for it to come back lower. So the first target here is 53.50. Second target is 51.80. So bearish bias for oil. Copper here. Copper is also bearish, and we have a bearish candle close today. Next target is 2.47. So bearish bias for copper here as well. Bitcoin has done well, and we have a big move to the upside. So nice bullish candle close. We saw a double bottom here. Price held in this range for a while, and today it broke through it. So bullish bias here, and I will look for price to go higher. And in this case, the first target here would be 12,200. And then if it gets through that, then we're looking at 12,800 as the next target. So bias is bullish for Bitcoin. S&P 500, a huge drop here in the equity markets. Bias is bearish, so it's negative right now. So looking for price to drop further. So we saw that US Treasury said that China is manipulating their currency, and that again dropped the market further. So bearish bias, looking for price to drop further, and target here is 2720 level. So bearish bias for S&P 500. NASDAQ, also a huge drop here. This is one of the biggest drops we have seen in quite some time here, and bias is bearish. First target is 7180, and then if it continues on, we are looking at 6950. So bearish bias for NASDAQ. DAX as well, a big drop here with all the uncertainty in the market here. Next target is 11,500, and if it goes below that, we're looking at 11,300. So bearish bias for DAX as well. And FTSE has not done as well either. All the stock markets equities markets are basically down. So next target here, 7130, and then below that, we're looking at 7080. So bearish bias for FTSE as well. Last but not least here, Nikkei. Nikkei, huge drop here. So this one is also looking bearish. Next target here is 19,970. So about 20,000. That's our target for Nikkei here. All right, so overall, there's a lot of volatility in the market. There's a lot of stuff going in the market right now. especially with US and China trade tensions escalating. Things are unfolding very quickly. So I highly suggest being careful with their trades. So that's all for today. Have a wonderful trading day, and I'll see you again tomorrow. Bye for now.